Good morning, everyone. Welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. I apologize for the past couple days. It's been not allowing everybody into the Zoom room this morning. There's a couple changes that I made, and I think today we're back to normal. So welcome back, everybody. Sorry, my apologies for that. Hopefully you caught the replays. They're available on the On Time, On Target YouTube channel, is where I load them up every day by 9:30 our time here in Central Texas. So having a case of the Mondays pretty much all week long with the Zoom issues, and this morning it decides it's Schwab issues that are going to be the issues of the day. So I don't have any trades for you this morning, longs or shorts. So sorry about that. So if you're here for that, I get it if you want to drop out. However, what we're going to talk about is the big news of the morning, what I'm excited about. And I'm not the world's biggest crypto currency bull, but I'm about to be, because China banned cryptocurrencies. So it's like, okay, let's peel that back a little bit. So I don't care where you are on the fence of cryptocurrencies. When the number one bad guy in the world, the communist government that's been cracking down left and right for the past 2 months now on all things capitalist in their society, their stocks have been crushed. So it's almost validation of the good idea behind cryptocurrency if China comes out against them. And it blocks the U.S. government. Now, if the U.S. government was considering, outlawing or banning or making it illegal for cryptocurrencies, they sure can't now because the number one enemy of the state just decided they were going to ban it. So it's almost like the U.S. can't ban it now. So all the cryptos are getting hit across the board, somewhere between a couple percent all the way up to like 10%. So I think that's going to mark a buying opportunity. I also found out about a new ETF this morning that opened up Wednesday. I don't know how I missed it 2 days ago. And it's interesting because I ate lunch with my First Trust contact on Wednesday. And it's a First Trust cryptocurrency ETF, and it started trading Wednesday. And for some reason that did not, shout out if you're listening, bud, but feel free to make mention of your brand new cryptocurrency ETF, because I think that's going to be attractive for folks. And that's actually jumping on the news. So I like MicroStrategy as a proxy for Bitcoin. I like ETHE for exposure to Ethereum, and I really don't have much exposure to anything else, but I will through this cryptocurrency ETF called CRPT, and we'll take a look at that today. All right, again, no trades because my Schwab system is not happy with me this morning. So we've got nothing there for the long-term. For the question today, we'll do what is an index fund. We'll talk about some of the taxation of an index fund that makes them very efficient. And of course, that's coming under fire with potentially some new regulatory changes from the current administration as part of the tax code. They might change the tax efficiency of the actual ETFs, which would be unfortunate, but it's an easy place to make some money, if you will. All right, if you're catching us on replay, thank you so much for checking it out. Make sure you hit subscribe and the notification bell. And if you want to join us live, it's $25 to come on into the room. You can ask any question you want, and I will answer it live on air. And with that, let's go ahead and get started. All right, here's our lineup card for today, Friday, September 24th. Not setting up as a Friday by any means. We've been up pretty much. We were down big on Monday, and then we spent most of the rest of the week recovering. We had the big Fed meeting on Wednesday afternoon. Everything went great. And then we're coming on into Friday, even with the drop this morning of 0.5%. We're still up for the week, which is pretty good in September. That didn't happen a whole lot. So we'll see where today goes. I don't think I think it actually turned out to be kind of positive. So I think we finish in the green here, even though we're 0.5% in the red right now. And I think it's largely because it's going to be a move to crypto. I really do think there's going to be a ton of buying in that space today because China's hated so much. But we'll get back to that in a second. Standard disclaimer applies. You have to do your own due diligence. We're acting upon anything you hear in the briefing this morning, and full information is available at ototnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. This is all about growing our money. It's still highly speculative. I can't overstate the risk behind cryptocurrencies. They could be made illegal in the US and everywhere else, and it could be a black world thing. And then, of course, you don't want to own it in that case. Even if you could make money, you just want to stay away from stuff that's not legal, right? So that's what we're going to take a look at. Again, if you want, what I'm telling folks is if you want exposure to cryptocurrencies, if you're, I hate to tie it to an age, but if you're investing a small amount of money and that's all you have and you want to go all in on crypto, that's okay. Generally, age-based, you'd want to do that when you are younger, because if you lose it all, then you have time to make it all back, right? So that's that responsible money management. However, if you have a larger portfolio, you can go up to 10%, just like with gold. You can go up to 10% in cryptocurrencies without batting an eyelash, right? And just realize you may make a lot of money or you may lose a lot of money. But if you participate, so here's the thing, like I tell folks with other stocks that are overpriced, is if you buy into crypto, you have to hold it. So if you buy in today and it drops 50% by this afternoon, you don't sell, right? So you don't buy it and then turn around and get punched in the face to sell it. If you believe in the long-term theme, you buy it, you hold it, and you see if it plays out, okay? Because it moves too much. And things that move that much, you can get emotional and just wake up one day in a grumpy mood, or have a case of the Mondays on Friday and decide, this is not my day, I'm going to sell out of something on a whim. You don't want to do that, right? Because then it's going to go on to make 10x, and you're like, what was special about that one day I woke up and decided all of a sudden to sell it? So don't get in it unless you believe. If you do get in it, make sure you still believe and take the ride. That's the only way you're going to get paid on this, because there will be ugly days in paradise in the crypto world. All right. Tactical objectives: crypto banned in China, time to bail or buy. I think now is the time to buy. I'll be increasing my exposure today for myself, and I have several accounts that are still under review right now. So I'll be adding exposure to I'm going to try this CRPT fund out, and it's only been around 3 days. We'll look for the chart. There's not much on the chart after 3 days, but I do think as people find out, I'm in the business, I didn't know about it. So come on, CNBC, where I'm surprised they haven't been beating the table with that this thing exists. And question today: what's an index fund? We'll get to that for our flow. Long, short, open, short, long. We'll take a look at the market review around the world. We'll come back to our headlines here in the U.S. There's the three things we'll take a look at. We've already mentioned all those funds, and then contingencies and academic resources are standard. All right, let's take a look over at ThinkPipes, and here's that CRPT on the far right that we have here. So we'll take a look at that, and we'll get rid of Luckin. I know Luckin's fun to watch. You're right. And let's go MicroStrategy first, which is gapping down on the news, right? Which is to be expected. People are waking up scared. And Ethereum gapping down on the news as well. So if anything, it's weird because the two main ones that I use are gapping down, and the one that I'm looking to go into at least has a few hundred shares that have traded up. What's that? 10% higher. Well, now it's about to change, I guess. But anyhow, that one doesn't trade after hours, so we'll take a look at that here in a minute. All right, so lots of movement in the week. Where are we in the big picture? This is important to always keep in mind, is we did break out the bottom of the channel, but since then it's right back up. So really it does kind of make a difference now on whether this holds. If we hold at this 440 or above level, where everything's fine, that means people have read the tax proposals and they're like, yeah, I guess that works. And again, they're not targeting the masses. They're targeting really the less than 1% out there with the Tax the Rich campaign. So, probably going to be pretty palatable as far as passing some version of what they have on the table. But if we hold this 440, I'm not worried at all about it. If we don't hold 440, remember, there's nothing stopping this from selling off hard. I'm not trying to make that call. I'm just saying if it doesn't hold here, I could see a couple of pretty big down days coming out of that as people reassess how they want to position things for the year. We don't chase annual performance around here. We don't chase Quarterly performance, we do the right long-term investing philosophy, and we get paid for that. But there are folks that have to chase a quarterly, monthly return. And some folks could be just going to cash here and saying, look, I've got my return for the whole year. My clients are happy, so I'm out. We'll readdress in 2022. I think that's a terrible way to invest, and that's why I'm happy I don't have to chase performance goals. All right, let's go take a look at CNBC and share that out for you. All right, so here's where we are now. I'll refresh these. So down 0.5% in the Dow and a little bit more in the S&P, and there we go. S&P and the NASDAQ futures. Go over to Europe. They're lower across the board. Asia, Japan is up. Everybody else is lower. Investors seek clarity on the Evergrande situation. The more, we talked about that either yesterday or the day before. I can't remember, but the situation isn't nearly as bad as we thought it was going to be with the contagion into, other players in Asia, as well as, Europe and around the world, right? And of course, U.S. banks have their hands in things international too. So it wasn't going to bleed over into the U.S. and be our Lehman moment for the next big crisis. And it does not appear any of that's going to take place. So again, the U.S. market digested that on really Tuesday, scared everybody Monday and Tuesday. And then Wednesday, it's like, okay, this is not the end of the world. So again, Japan's looks like they're pretty convinced it's not going to affect them. So that's good for the international financial system. 10-year rates have jumped quite a bit. Remember, we're generally talking 1.3. They're up to 1.44 now. Part of that is from the Fed, and part of that is from the actual Evergrande fallout that's raising interest rates around the world. Okay. Oil at 73, gold and silver selling off a little bit. And here's your little bloodbath going on in crypto. So basically everything, Bitcoin's down the least at 8.6%. So if you have a large holding this morning, you're looking at some ugly numbers. I do think it's time to move in if you don't have exposure already. All right. And here's the headline that we're talking about. Bitcoin sinks as China intensifies crackdown on cryptocurrencies. And actually, here's the People's Bank of China said services offering trading, all of this stuff strictly prohibited, right? Overseas crypto exchanges providing services in China also illegal. Yeah, so they're serious about it now. Is that enforceable? I don't really think so, but I don't know. I don't live over there. Maybe they can enforce all kinds of things. But yeah, I just wanted you to see that. All right, let's take a look real quick at the three. Here's the MicroStrategy chart. I like this. I've been dabbling anywhere between 500 and 600 as far as the buying opportunity, and it looks like, yep, down to 578 today. So back in the window for a buy as well. A lot of hope it's the crypto investment. So you buy it, you hold it. And this one is actually a software company behind it. And Michael Saylor, the CEO, is a big bull of crypto. So anyhow, that's why I'm in that. If you want a more pure play, ETHE, which we can't get to from this one, we have to go over to Yahoo. Yahoo Finance, ETHE. Can't type. Here's the chart for ETHE. Let's go out to a year chart. So it's been kind of on fire, right? Because so has ETHE. So the you're buying a little bit higher here, but also the coin is on fire. And then so I have no problem buying in here as well. And then the last one, CRPT, might be too new for FinViz. So we got to go try it over here in Yahoo. All right, there's what we have for the Sky Trust, and I don't get the opening bell's about to happen, but we're not trading anyway. So you can see it's up big this morning. I actually just switched to down big. So it'll be starting trading here about now, actually. There you go. So up to almost 23. So no, actually dropped down to 19. So what a crazy move. Let's go over and take a look at how things are moving in the opening. And again, I'm going to be buying in this CRPT throughout the day today. We'll see when I get the opportunities. Okay, so you've got your four charts, TD Ameritrade, ThinkPipes platform. over here. So that's on the far right is that CRPT. So you can see pre-market, the it closed here at this 1995 level, jumped all the way to 23, and now it's fallen down with the rest of the sell-off. Again, I think that's this will be a buy signal down here. Okay. I do expect, maybe not at the open, it's not our trading philosophy at all. I expect these to finish higher today. So normally you would say, okay, these are gapping down and going lower. I don't think that's going to be the case at all. It's going to be if you're going to buy them here soon, because they're going back higher sooner, if you will. So that's what I think is going to happen. We're seeing that so far. We'll see that. We'll watch and see if that plays out. But you can see MSTR down 6%, Ethereum down 11%, crypto down 3%. Okay, let's take a look at the rest of the stuff as it opens up this morning. Not too many names in the green. Some spec names. Costco released earnings, so they are in the green. I was going to see if we can pull up their chart here. You have quite a bit of Costco. I call that kind of the safe holding, if you will. So $3.76 a share, and it's moving higher on the news. Lockheed Martin, I've been scooping this up, and I'm happy I did. LMT released last night. They're increasing their dividend, not by much, by like 10 cents or whatever, but that every little bit helps. And they announced like a $5 billion buyback, which as far as buybacks are concerned, isn't that big. But the fact that they are buying back their stock does make me like it. The Apple, that's been the winning combination for years now, is Apple increases their dividend occasionally and they buy back a crap ton, which is an official financial term, of their stock. So that helps reduce the float. So all your shares are individually worth more over time. All right, so only a few other names in the green. Let's look what's in the red. MicroStrategy, that's already bouncing. Remember, that was down 6% earlier. So I wouldn't trade. I'd buy it again, that's not our trading strategy, but I think they're safe to buy here. Palantir down after a big move up yesterday. KWeb, all I do is lose, lose, lose. It seems continues to fall off, and with Alibaba, pretty well flattened that across the book. I'm holding my Baba, but I wouldn't expect a client to. DD selling off as well. So China getting hit hard, as it has been getting hit hard. All right, back in the green, see what's up. Yep, okay. And then here's that bounce I'm talking about in MSTR and Ethereum, and even CRPT starting to climb here. So may end up a little bit early to hop in on this CRPT. All right, last thing I want to talk about is this index fund definition. What is it? Well, they had mutual funds for years, born out of they've been around for a while, but 80s is when the mutual funds got super popular. But you ended up with all these tax consequences. So the worst mutual fund story out there was you had money in a mutual fund, and then over the course of the year, you'd lose like 10, 20% back when markets went down, right? That could still happen. And then at the end of the year, after your portfolio has dropped by 10 to 20%, you get this distribution. Well, the reason you got the distribution is which is taxable. So, things, as a mutual fund starts to drop, people start selling to get their money back out. Well, all of that selling, especially if the mutual fund's been doing well for a long time, causes a capital gain inside the fund. That capital gain is then passed on to you in December, like the last week of December. So you have like no time to react to it, which another thing made me mad, right? If you know it's coming in July, you can adjust things. You can't in the last week in November or December. It just is what it is at that point. So you could lose money all year long and then have a $8,000 to $10,000 tax bill that you're going to pay taxes on. You're like, that's literally the stupidest thing in the world. So again, one of the reasons why I rail against mutual funds, don't get me started, is I guess what I should say there. So the index fund was born out of that. It's lower cost, lower operating expenses. It's completely passive. It follows whatever index is out there, regardless of the state of the market. So it is really on its own thing. And the tax efficiency of it, I will say I only understand about 90% of this, so I cannot speak as an expert, but literally they rebalance, I think it's every 15 seconds. And all of that buying and selling of the stock is not a taxable event since they do that. I'm looking for that specific line here. It's probably under tax efficiency, but yeah, I'm not seeing it. But certainly there it is, how it works. All right, it's not going to give me my 15 seconds, but it is, I'm pretty sure, 90% sure that's 15 seconds. And they buy and sell to, rebalance everything within their portfolio. So, but there's no tax consequences of that. So it's low drag, if you will. And by doing that, you can have a more clean exposure to all of these stocks, whether you were actually, if you're doing individual stocks, one of the things you need to do is hold them. You don't want to be in and out of them all the time, because then you would just cost yourself a tax nightmare, like mutual funds cost. So anyhow, so it's here for a reason. There are, if you ask me my investment philosophy, I would say it's core and satellite on best of breed themes out there. Again, specifically looking at index funds for some themes that don't have a best of breed stock, clean energy, robotics, 5G, a lot of these plays, it's easier to cyber. It's a lot easier to just go ahead and pick the whole fund versus trying to pick out the best names within each, the Qualcomms or the Palo Alto networks for cyber. You can supplement it with that if you want, but mainly it's index funds for the big themes that are out there. All right, that's all I've got for you today. So again, sorry about the tech issues this week. We're looking back. I stayed on the TD Ameritrade screen while I was talking about that, but it's probably more interesting than looking at index funds anyway. But you can see that these are bouncing back. The U.S. market, I said we could end up in the green. We're almost back to the green already in the first, 7 minutes of trading. So with that, you guys have a great weekend, and we will see you back on Monday. Have a good one.